Hello. Um, Let us analyze 30th April Tuesday's market on Nifty. First, as we do the previous day high, this is marked here. Previous day low is marked. This is the previous day low. And today's CPR is kind of wide. Usually, when there is a wide CPR, it's a sideways or reversal day. Usually, a CPR is usually a sideways or reversal day. Now let us start from the first candle. Before that, I want to highlight the you can see the red line which I plotted here. This is all-time high. If you see on the daily time frame in this chart, you can see that this is the all-time high which I marked on my chart. Um, Usually um, we have to mark some important levels such as swing low, swing high, all-time high. These are important levels. Like if you see here, this is the all-time high, 22,785 somewhere there. So this is the all-time high which I marked, and let us start from the first candle. When the candle opens, this is kind of a green candle, and it opened above the previous day high, and previous day was kind of trending day. So whenever such thing happens, like the first candle opens above previous day high, and there is a movement, there you can say a clearance. So in some there should be little or more clearance, so there should not be immediate resistance like this pivot is slightly above, it's not immediate, so we can take a trade. That trade is called first candle breakout pattern. So this candle is closing, and this is a bullish candle, it has to be a bullish candle, so you can take a trade. This candle can open here or above this anywhere, but your risk reward should be good. Like if you enter here and stop loss here, so it should be double, so somewhere this high should be your target, which is achieved. Your stop loss should be below this PDH. This people they call it OD pattern, also open drive pattern, because the first candle is above this. Some people call it the morning star. So there are different names for this pattern, but this you have to understand the concept. This pattern works when any candle, the bullish candle, is opening at the PDH or above the PDH. Okay, you can take a long trade and your trade can hit. Like suppose here, you can exit the trade. Now taking the trade means you can buy option, you can sell option, you can buy future, you can sell future. There are different types of trades. Whatever suits your finances or your personality or your uh, control, discipline, whatever characteristics you have, you can take the trade accordingly. That is a separate uh, ball game, which I will explain how we have to take the trades numbers based on your capital, how much capital you have to deploy, what should be the daily stop loss according to your capital. So we should always follow a good risk reward, which is 1:2, and this whatever I'm explaining is purely directional. Like you should know how the market works, where this market goes, what patterns will happen. Once you learn that, then you can like, depending on your capital, you can take the trades. You can either buy options, you can sell options, or you can do in futures and selling options will require big capitals, but buying option is is just buying a premium, so you don't need much capital for that. So according to your capital or your capacity, you can trade, but first you should know how the market behaves, what direction market will go. You should be able to predict the market, or you should trade the market. You should always trade what you see. You should not trade what you think. That is the basic rule of the market. So you should be a robot while trading. There is no emotion, there is no space for your judgments, your thinking. It is pure analysis. If target hits, fine. If stop loss hits, fine. You have to just get out of the trade as you plan. Okay. Now, this trade works. The first trade works. Now, since I told you here, white CPR is usually a sideways or reversal day, so the experienced traders, they wait for bigger opportunities. Like you see here, it did not even touch and it reversed. So you can either take a trade here because this is all-time high. This is a big resistance. So you can enter here, stop loss above, and 2R is your target. But when it goes this side, it might have hit your stop loss first and then the target. Now in this case, what usually we have to do is this is called as M pattern, because the market, the the M pattern is um, there are three parameters for M patterns. These three conditions should be met. First is the first candle should be green candle for M pattern. Second is the M pattern is like the market is going up, 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 and at some point it should trace down at least 50 to 60% of the total range. So it has retraced back and then again went to the same point, and from there it has fallen. Now, this can be M pattern or this can be a fake breakout as well. So, you see this candle has given a breakout and then this candle has reversed. And since this is the all-time high, this has reversed so fast. So you could have bought option here, you could have sold future, and then your target will be a CPR. CPR, since it is a strong support, or your target can be days low here, somewhere here. um, okay, we can discuss more on the patterns, as in when we will get the similar patterns on our chart. I think this can be a reversal pattern. This happens when there is a wide CPR, and usually the professional traders, they wait for such opportunity on the there are three types of CPR. One is narrow, average, then wide CPR. So wide CPR, generally first half or the first three-fourth of the day, it will be only um, it will be trading in one direction. Then there is a chance of sharp reversal. So uh, the experienced people, they wait for such opportunity. You could have made a big profit here. uh, so that's how trading works. It's a complete um, discipline, and you have to just follow your risk reward. Okay, thank you.